Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast. For those of you who are subscribed, welcome back. And for those of you brand new, welcome. If you're not subscribed, actually, please do subscribe to this podcast, as we've got a lot of great information and news to be sharing with you as the financial world that we all live in is changing quite rapidly. As you can see from my shirt here, it's almost Christmas time, so Merry Christmas to all those out there. Happy holidays as well for those who don't partake in Christmas. So speaking of partaking in Christmas, I know someone who does. Chris Agelastos, my co-host here. How are you, Chris?
Hey there. I'm doing well. I've got almost everything ready, just a couple of last minute things.
It's hard to believe that Christmas is here and finally upon us. And
It's crazy.
we'll blink our eyes and it'll be Christmas 2026, I'm sure, in no time. So,
I know.
well, I'm glad you've got everything done. I'm kind of in the same boat as you. I've probably got like just a few little odds and ends left to do, but I think I've got.
That's kind of how it
This is
goes.
probably one of my better prepared years that I've had. I think overall, anyway. All right. Well, let's talk about financial stuff. Talking about getting prepared. Getting prepared is a very, very important thing to do in this day and age. Our first article here from CNBC: gold and silver prices soar to new highs as the yellow metal reemerges as a hedge. Now, the only thing I would take minor exception to here, it hasn't reemerged as a hedge. It's always
Yeah.
been a hedge, okay? But the investment world as a whole is starting to recognize it as such. So we'll just have to leave
hmm
it at that. And as we just talked about prior to recording here, the price of silver, we're recording, this should air tomorrow, but as we speak is, what would you say it is now, Chris? 70,
70.93 at the moment. It's almost $71.
almost. Good Lord. And what we're up, well, we'll get into the article here. We're up by
Yeah.
120, well, prior to this article anyway, 120, like 128%, I think it was, somewhere in that ballpark. With
Yeah.
gold up nearly 80%. I mean, the metals have
hmm
just been absolutely flying this year.
Yeah.
And looking back, we've talked about this several of our episodes. With the price point starting in 2025 at basically 3,000 an ounce, and now we've got gold at basically 4,400 an ounce. Silver, I think we started just shy of 30, was it?
Right
Maybe
around 30,
30,
32. It was around there.
somewhere. Yeah, and
Yeah.
now you're looking at 70. I mean, and understand, this is not something that, we are typically or traditionally advocating a person does with their investments for the investment side of it, albeit, gold and silver have been like the top or best performing asset class for like a lot of years now.
Yeah.
We are suggesting people do this like the article says here, as a hedge. Give yourself
hmm
diversification, a little protection. And at the end of the day, the profitability of this has been really vital, in so much as that if a person listened to this podcast, or something else out there,
Yeah.
and took advantage of being diversified in physical metal, we're not talking paper equivalents of it, the not only do you have protection against what could be a shaky stock market ahead, some of the problems that we've run into with our banking system, and then certainly the big cloud over there is the long-term stability or survival of the U.S. dollar. Not only do you have the diversification for that, Chris, but from an investment standpoint, it's been a great thing to help counterbalance all the inflation that we're all suffering from. And
Yep.
I'm actually going to, for one of, hopefully maybe even our next podcast, I was just talking to an individual yesterday, a gentleman who was telling me about, there's a report out there that actually tracks inflation with the original products or goods that they did at the beginning, versus, and for those tuned in who are not familiar with this, over the course of time, as we are given our inflationary figures from the government, what they have the ability to do, and they do very, what's the word I'm looking for? Not sparingly. They do it they do it very intentionally. Is
Yeah.
they can throw out those goods that they feel have gone up more than they should, and it doesn't properly or adequately reflect what the real inflation in the economy is. But the real inflation is here.
Yeah.
People are,
Yep.
we have it in our gas prices, we have it in our food prices, we have it in our energy prices. literally every aspect of our life is costing more money today than it did a year ago and 2 years ago. Are there exceptions? There's probably a few exceptions, but and tariffs didn't help either.
Sure.
But again, that's where metals come into play and give you that balance you need.
Yeah, you're absolutely right, and that's why it's how you said. We're usually telling our clients, look, diversify into metals so that you have a good hedge, some protection, so that you can have some nice steady growth. Help offset inflation, which of course is all true. But those that would have hopefully listened and diversified, about this time last year, would see almost a doubling in their money, depending on exactly what day they bought in and how much gold versus silver. So you can have a great investment return. I think most people would probably be happy with doubling their money. In fact, if it was a guaranteed thing, everybody would probably do it, right?
Sure.
And so it's kind of been the best of both worlds. And I will say, a lot of this has been due to central bank demand and bigger institutional buyers, ETFs, money flooding into ETFs, and other types of pension funds diversifying to protect some of their clients' portfolios with gold and silver. So while this is becoming more mainstream for the average investor, I think it's still very much in the minority of people's portfolios, just because they're really only starting to hear about it on the typical financial networks this year. Prior to that, gold or silver would get maybe a small mention, but unless you were looking for it, you'd probably miss it. And so there's still plenty of time. I mean, think about it like this: we've got some of the big entities investing and pumping money into metals. What's going to happen when 30% or 50% or 80% of our population realizes that they need some of this too, and they start shifting their funds into the game?
Right.
You're talking smaller dollars on the individual level, but multiplied by maybe hundreds of millions of people. So there is
Right.
still a lot more room to grow, and I think 2026 is shaping up to be every bit as exciting as 2025 was for us.
Oh, for sure. Well, and part of the issue I think with the average investor getting into, again, physical metal, not paper metal,
Mhm.
not an ETF or not mining shares or things of that nature. That's fine if people want to do that, but don't look at that as being the equivalent of having physical gold. It's still just
Right.
a piece of paper that is reflective of a value. Whereas with physical,
Hmm.
you have an unencumbered asset. There is no debt tied to it. And I think one of the greatest strengths to precious metals that I've shared with clients over the years is the fact that it's not currency specific in terms of deriving its value. So that being said, it's not dependent upon the US dollar in order to have value. It has
Right.
value in every currency throughout the world. And we've said it numerous times, taking a page or a look at what the central banks are doing, what the BRICS
Mhm.
Alliance is doing, institutions are doing with buying physical gold. There's a reason it'd be a lot easier, especially with the bulk that they're buying, to buy it in paper form, but there's a reason they're buying it in physical form. And Chris, I don't know about yourself, but a common question I get literally, I mean, literally seems daily at this point. Friends, people I may run into on a golf course or what have you, is them with the price appreciation in metals being as it has been. They ask, should I be selling right now? And
Yeah.
just because something goes up doesn't mean it's that you need to sell it. And there is that old saying, pigs get fat, hogs get slaughtered, as it pertains to selling in order to take advantage of whatever growth or gains are there. But understand,
Hmm.
a driving force should be, and it is for at least our clients in getting into this, is that hedge. So just because it's
Yep.
it's performing great doesn't mean you need to get rid of it. It's like getting rid of an insurance policy. But I will also, for those
Yeah.
tuned in, I'll also encourage you by saying all of those factors that were discussed. Let's just take this podcast over the last couple years as to why metals are going to likely be moving up, which they now have. We know in hindsight, all of those factors are not only equally as present, but they're more present today. So what caused it to do what it's done? It's likely going to continue even to a greater extent because again, those factors, those motivating factors, are still there. So talking about motivating
Yeah.
factors, CC will put in our next article here. A big motivating factor, as you see here, gold sets. This is Watcher Guru. Gold sets new record high at 4,400 as BRICS moves away from dollar. That's a pretty telling statement right there, Chris.
Yep.
This has been. It hasn't even really been a slow process. It's been really a consistent and very deliberate process. And by process, I mean this BRICS alliance moving further and further away from the dollar.
Hmm.
And what's I think a kind of a critical or key point here is the BRICS alliance has already set up a currency for trade or exchange that's partially backed by gold, and it's also backed by the participating nations' currencies. So
Yep.
it's a better option for a lot of reasons, and this is all part of that term that's becoming more known now, Chris. This de-dollarization,
Hmm.
where with intent, they are trying to get away from the dollar for control reasons, to strengthen their own domestic economy, but also because there's a lot of concern with the U.S. debt and with the amount of dollars. And we covered, I think, on our last podcast how the Fed is quietly, I don't know why they say quietly, but quietly printing more currency as we speak. So
Yeah.
this, to me, all spells bad news for the U.S. dollar.
Yeah. Just look at it. If you really want to kind of simplify it, the US is continuing to print and create currency and not, at least knowingly, adding to our gold reserves. And you have all these other nations that are adding physical metal, like you were saying, not ETFs, right? Not mining shares, but physical metal to back and protect their currencies. And that's a telltale sign right there. They are looking to strengthen their positions. Our position in the dollar is weakening. Again, I'm not saying it's going to disappear and not be here tomorrow, but we're heading down a path where we're continuing to weaken the dollar. These other nations are strengthening their currencies, and they're using physical metal to do so. And I think that right there alone should motivate the average person that has some savings, has some means available, to do the same thing and protect their nest egg by backing it with something physical, something tangible that has stood the test of time. And you're right. Just in fact, I had a client yesterday kind of asked me the same thing. They were wondering if they should sell a little bit of their metal and take some profits, but then they said, but then I would just want to put it right back into gold or silver again, and that wouldn't make sense. I
Right.
may as well just keep holding it, and that's what I've done, is just kind of, and obviously I need to continue to accumulate, but just accumulate over the years. And I mean, I know it's there, but I kind of just try to forget about it. And obviously, if there's an emergency and the cash that I keep on hand isn't enough to cover it, then maybe I would have to sell a little here and there. But it's nice to know that I can set this aside and not really worry about it. Just let it grow, let it do its thing. If I need it, it's there. And if I need to, at this point, if I had some crazy monsoon storm blew through like we get here in the Phoenix area, and I had $10,000 worth of damage to my roof or to my house, I could pull out just two gold coins and cover those repairs if I really need it. And so it's nice to have something that can protect your entire portfolio, but also you can just take little pieces of it and liquidate, as needed in an emergency.
Sure. Yeah, it's a functional insurance policy. Well,
That's
thank you
it.
for that, Chris. And for those of you tuned in, as you mentioned at the onset, we wish you the best this holiday time of the year. By the way, we haven't ever really talked about this, Chris. You say to people, Happy Holidays. Do you say
Mhm.
Merry Christmas or both?
If I know what they're celebrating, then that's what I'll use. If I'm not sure, I'll say Merry Christmas and Happy Holidays, just to cover everybody. I mean, I'm not trying to offend everybody, so or offend anybody. So I try to get everybody included there. But I found that we have a lot of Jewish friends here in the Phoenix and Scottsdale area, and I've never had one of them be offended by hearing Merry Christmas. And I don't really hear anybody say a complaint about hearing Happy Holidays either. So I think if you're
I've
nice and
heard
you
it.
smile and you're saying something positive, I mean, it happens,
I
but I've never really had it
I've
happen
heard
to
it.
me.
And I know some people
Yeah,
do take offense to the happy holidays because they feel it's
sure.
a omission of Merry
Hmm.
Christmas and Jesus' birthday. So, I mean, and the only reason I ask is that we do live in a very um, sensitive society, we'll call it, in today versus we just had this
Yeah.
discussion the other day. I'll be 56 in April, and things were a little different when I was younger. Things weren't quite as sensitive as much as they are today. But to those tuned in, sorry to
No.
bore you
Well,
with all of
and
that.
now, yeah, no, I was just going to say now somebody could clip just 2 seconds of this podcast with us saying, one little part, and they could make it out to be negative too. And I think with all the social media and the Instagram and TikTok type society where you're just swiping through and quickly looking at little sound bites, you can get caught up in that. But
Yeah.
you got to listen to the message, the overall message, and hopefully, if you know the person, then you cut them a little slack if they say something that you think is a bit off.
Maybe at this point, what we can do is start off with we're at a point where we just say, no offense, but Merry Christmas.
There you
No
go.
offense,
No
but
offense, one
happy
way or the
holidays.
other.
All right. Well, wish you all again happy
Yeah,
holidays, Merry Christmas, all the things.
yeah.
And thanks for tuning in. If you're not subscribed, as mentioned, please do so. And if you'd like to contact us for any more information about gold, secret war report, etc., you'll see our phone number here in the show description. So thanks a million. Have a great rest of your day, great holidays, and we'll talk to you soon.
Take care.